Okay. Hi, Storm.
Hello there. How are you, Lori?
We're good. We're always good. I always talk about myself in the third person. Anyway, we're going to just kind of jump right in. We've done some other videos and we have a particular topic we want to talk about today. And what is that?
That's about what works and what doesn't work regarding foreclosures.
Okay. And what are we finding out more and more every day about what doesn't work?
Well, I should probably give a disclaimer first that although I have a litigation support company that is, we have many retired attorneys and practicing attorneys that work here, but we don't give legal advice. We can't give legal advice. We'd have to be licensed in every state in order to do that because we do these analysis for homeowners in every state. So we can't give legal advice. We can only basically say what we would do in a similar situation. So I just wanted that as a disclaimer that we don't give legal advice. We're also not a foreclosure relief company as defined. What we do is analyze transactions. The analysis just tells what happened in that transaction. If the analysis shows that there was wrongdoing by anyone that had hurt the homeowner, so be it. They take that information, they give it to their attorney, and they go from there. So we want to make that a point as well. It's just like if someone thought that their home was overappraised and they went and got a retrospective full field review to see exactly how much it was overpaid, if any, overappraised, if any. The results of that's something else that a homeowner could use. Not guaranteed that there's going to be anything there. We don't guarantee a result. We just guarantee that what we find is backed up with evidence to prove what our analysis showed.
Okay.
I want to get that out there as well.
Okay. And so, for the purpose of the homeowner out there finding themselves in trouble, whether it's pre-foreclosure, behind on payments, got a default letter from the bank, many different kinds of issues, gets people upside down or sideways with their mortgage. What are you finding that almost all of these people fall prey to when looking for help in fighting foreclosure?
Well, a couple of things that homeowners do, because there was a lot of press and media on loan modifications and the different HAMP programs that the government had and things of that nature. One of the first things they look at is a loan mod. Loan mods, you don't need to pay a company to help you get a loan mod. You can do it yourself. You can call HUD. They will hook you up with a HUD counselor that will get on the phone with you with your mortgage company. Only problem with loan modifications is a bank does not have to give you a loan mod. They do it out of the kindness of their heart. Nobody can force them to give you a loan mod. Matter of fact, the government even pays them $1,800 if they decide to do so, but they don't have to. This is another fallacy. This is another lie that they have to give you a loan mod and you will get a loan mod. That's not true. Second thing is homeowners will go and hire, quote, a foreclosure defense attorney. Everybody needs to understand that prior to about 10, 15 years ago, there was no such animal as a foreclosure defense attorney. These were attorneys that were doing wills, divorces, criminal stuff, civil stuff, and things like that. And then all of a sudden, they decided to call themselves foreclosure defense attorneys. The problem with the vast majority of these so-called foreclosure defense attorneys are what we call and have labeled stall attorneys. Because they don't know how to analyze a mortgage transaction, what they do is they know that the homeowner breached the contract and the homeowner agreed that the bank could take their home if they breached the contract. All they do is stall. It's probably the greatest scam ever perpetrated on the public by the legal field. What they're doing is they usually what they do is they charge a monthly fee, and the longer they can stall it, the more money they make. But at the end of the day, in 95% or higher, the time the homeowner gets foreclosed on after paying a bunch of money. So that's kind of sad. So that's the first two things that they go to.
Talk to us about forensic audits, securitization audits, any of the alphabet soup group audits going on out there, and how have they worked for homeowners who have gotten them done?
Well, securitization audits, forensic loan audits are known as scams. Matter of fact, we did a press release about these forensic loan audits. That's where everybody started doing forensic loan audits. Just a short history. When mortgage brokers could no longer sell loans, and you had the crisis back 2006, 2007, all up and through there, these mortgage brokers needed something to sell. So they started at it by doing loan modifications. And at the time, we saw that they were charging as much as $10,000 for a loan modification, allegedly. This was the dishonest ones weren't doing anything. They were just taking homeowners' money and then calling them back in a week and say, oh, look, the bank turned you down, you didn't get a loan mod. So the American public's not stupid. So what they started doing was filing complaints with the Attorney's General office and such, and they started investigating this. And so they passed a law that you couldn't charge an upfront fee to do a loan modification. You could only charge a fee if it was completed. So that kind of cut the legs out from these guys, and they said, well, heck, we can't make money doing this. So then they started doing forensic loan audits. And a forensic loan audit, what they did is they were going out buying software for $50 that had this pass-fail, whether it passed or failed, garbage in, garbage out that you put into the software program. So if you put in bad information came out. Still, forensic loan audits wouldn't help a homeowner in any way, shape, or form. We did a press release on with the loan modification. We did a press release on loan modifications, basically being something that you didn't need a company to do. Then we did a press release on forensic loan audits that they were basically scams. Jerry Brown, who later became governor of California at the time, was the Attorney General. He held a press conference and read from our press release that these things were scams. The Federal Trade Commission picked it up. They said they were scams. Then, same people, well, these forensic loan audits aren't making it. So now it said we'll start doing securitization audits. So then it went from that to the securitization audits. We did a press release years ago that securitization audits were a scam. The courts have found they're scams. Matter of fact, the courts came back and said there's no such thing as a certified forensic loan auditor. There's no such thing as a certified loan audit, and that these auditors were charlatans and their paperwork was empty gimmickry. Matter of fact, a lot of them have been shut down. The largest one, this certified forensic loan auditors that we said for years was a scam, was just charged by the Consumer Financial Protection Bureau. One of the people there already cut a deal. He was hit with a $400 and some thousand fine because he had no money. He couldn't pay it, so they basically waived it. He only had to pay $5,000, but he was to give more facts against this company. That's just a known scam. Matter of fact, if you go to something like Google Scholar or a place like that, put in certified forensic loan auditors, every case that's on there is a loss. Matter of fact, we found no evidence of anybody ever keeping their home using one of these audits. They're just basically, they've already been foreclosed on or in the process of being foreclosed on. So securitization audits are scams. You have other things like these mass joinder lawsuits, they're scams. You have people going around saying, well, the bank never lent you any money. And that's another stupid argument. The courts for over a quarter of a century, they call it the vapor money theory. It's just total nonsense. I say to people when they call me and they tell me that ridiculous argument, I said, okay, you got to cash out refinance that you took out cash. Did the cash come in seashells? No, they paid you in dollars. You were paid with that. So that's a ridiculous argument. You have other people going around telling people that everyone has $100 million. I've seen figures from 10 million to 100 million in a treasury account. Your social security number is your account number. And then you can call up the treasury and they'll give you money to pay off your mortgage. After you pay us, we'll show you how to do it. Utter nonsense. All of these are, if anybody tells you that the note split from the mortgage will save your home, is lying to you. Every court in the country has heard that argument, said it's nonsense. Anyone tells you that if there's robo-signing in your foreclosure, that will save your home, that's another lie. Every court case that's heard it said robo-signing is ridiculous, has nothing to do with the borrower breaching the contract. Didn't get into the trust in time is another lie. Every court in the country that's heard it said it's total nonsense.
But wait, why is it total nonsense? Because you're not a party to the trust?
Yeah. Well, that's the main part, is that you have the party to the trust. You have the beneficiaries are the ones who can say that that they can ratify it. They could say that it doesn't matter whether it got to the trust in time. Once that argument disintegrates, then they say, oh, wait a minute, that's a tax problem, and because it's a tax problem, they can't foreclose on you. Well, that's nonsense too. Well, what do you think these trusts would rather have? All the payments coming to them and have to pay taxes on it, or have no payments coming to them? So that's nonsense. All this remix stuff, total nonsense. Every court in the country has heard those arguments about the IRS, the remix trust, all this stuff. Total nonsense.
Okay, so
the key, Laurie, is that everyone needs to understand that there's a contract. The government can't get involved in this private contract. And we as borrowers agreed in the contract that if we fail to make timely payments and some other things, if we didn't provide for insurance or pay the taxes or things like that, they can foreclose on us. We agreed to that. So you're not going to overcome that. When you go to, if you're in a judicial state where you go to court, all the bank has to do is come in and say, Your Honor, here's the contract between Laurie and ourselves. Let me draw your attention to this clause where Laurie said that if she failed to make timely payments, we could take the ass. Your Honor, here's the proof she didn't make timely payments. That's it. Now, you come back with one of these stupid arguments like robo-signing or securitization or MERS or produced the note or didn't get into the trust in time. Judge is going to say, excuse me, how did that cause you to miss payments? We're here because you breached the contract. That's the problem that homeowners don't understand, because they're being scammed by all these different scammers, and they're being scammed by these stall attorneys.
So the bottom line is what you tell people all the time is, first and foremost, a foreclosure is a breach of contract case, right?
Correct.
Okay. So if in any way that's listed in the contract, they breached the contract, that's what the case is about right here. None of these other arguments. So at the end of the day, or the beginning of the case, we're up against a breach of contract case. And so what is at stake here is the contract. And if your signature's on it, what do they have to produce to enforce an foreclosure?
All they have to show is you breached the contract, that you didn't make payments. Done.
And then what's the second? What do they have to produce to the court to say we have the right to enforce this foreclosure contract?
In most judicial states, you have to, when you file the complaint, you have to have the note. You have to, be in possession of the note. And a lot of times they don't even have the note. So it's a lost note affidavit. That's all they have to provide. So that's another problem, is standing arguments. Standing arguments will not save your house. a standing argument, and the vast majority of them, 99% of them, were when the law firms are not in-house counsel for their banks. They're outside law firms that the banks hire to do these foreclosures. And in an effort to move things along, they filed a complaint. The note was in transit, but they didn't actually have it when they filed the note. Filed the complaint. And so months go by, in a lot of instances, years go by, where they're paying some stall attorney who's making these arguments. And at the end of the day, the court says, "Hey, wait a minute, you didn't have the note when you filed the complaint. We're dismissing this." Well, it's not on the merits. What that means is there wasn't a case. That's why the banks don't have to appeal it. All they have to do is they now have the note, is go down to the clerk's office and refile it. Now they've refiled it. They come back. The homeowner paid all this money all this time. Now they come back. The attorney says, "Well, I won the case." Well, you didn't win the case. It was just the bank screwed up not having the note. So now you need to pay me another retainer. You need to start paying me months and months again. Now they go to court. What's their argument now? They don't have one. So,
okay, so when these attorneys that people go and investigate trying to find a foreclosure defense attorney or someone to help them with their foreclosure case, whether they call themselves a foreclosure defense attorney or not, why do they think they can get away with saying, "I won X amount of cases, we won this case, we won that case"? At the end of the day, is a dismissal a win?
Well, they want to define it as a win. And as I tell these guys, I say it's a win for you because you made all this money. It wasn't a win for the homeowner. I think you're beginning to find out now, which we've known for years, that every single time they come back, you know of people, I know of people that there's a standing argument made. They paid a bunch of money. The judge says, "Hey, you didn't have the note. Your case is dismissed." Every one of them's come back and is trying to re-foreclose.
And what happens when they dismiss the case with prejudice?
Doesn't matter.
Does that allow a different note holder to sell or transfer the note? Does that allow somebody else to come at you?
Exactly. That's what they'll do. So,
okay,
again, standing arguments, assignment arguments, produce the note arguments, didn't get all those arguments are basically a waste of homeowners' time and money.
Okay, so let's say, for example, we have homeowner A and homeowner B. Homeowner A really can't afford to stay in the house. They're not able to get a modification. They're not able to work out anything with the bank. And they go and hire one of these stall attorneys on purpose because they just want more time in the house. Okay, that's homeowner A. Homeowner B truly wants to keep the house, has a large investment in it, and doesn't want to move and doesn't want to lose in foreclosure. So they go out and hire a foreclosure defense attorney who says, "Oh, I have all these arguments." How does having a transaction analysis done on their documents, getting to the heart of the matter, which is a breach of contract, how does this help them with fighting? And then the second part of the question is, how many times do they use this transaction analysis only to find that their attorneys won't use any of the arguments or any of the, things identified as wrongdoing in the transaction analysis? Sorry, long question.
Let me preface by saying we have turned down thousands of homeowners over the years. This is more of a labor of love for us. I've had a litigation support company for 40 years. Mortgage Fraud Examiners was born out of the litigation support company because attorneys were coming to us, how do you win these cases? So it's more of a labor of love for us, and we lose money doing them. So when people come to us, and if they're from the A group that doesn't have any money, they've lost their job, they're trying to stay in the house as long as they can. That's what we tell people. Stall arguments are not good arguments. Stall arguments are bad arguments for 99.9% of the people, because there's 4 places in every contract where the homeowner agreed that they would pay the bank's legal fees. The banks now are, because of all these ridiculous lawsuits and scammers, doing these ridiculous things, the banks now are charging for the legal fees. We see them many times for over $100,000. Not only does the homeowner lose their home, a lot of instances there's a deficiency judgment, then they got a $100,000 legal bill that they have to pay. So stalling's not a good thing. The only time it's a good thing is like you suggested. Someone has no money, has no place to go. Keeping the roof over their head for as long as possible is a good thing. For people like that, we tell them, we say, look, I wouldn't take your money if you begged us to do it. We're not going to do it, because the smart thing for you to do would be do a deed in lieu of foreclosure. Basically tell the bank, look, I'm basically done. I'll deed the house over to you. In most instances, they'll give you money. I've seen Chase Bank and other banks pay as much as $30,000 to a homeowner. Why do they pay so much? Is because in a judicial state, it costs them about $70,000 to foreclose. So lots of times they'll do that. So you have that. B, where people want to keep the house, need to keep the house for whatever reason. A lot of those people have said, well, look, unless the Army Corps of Engineers came in and said you have a gold mine or oil reserves under your property, you don't need to keep your house. It's a bunch of, 2x4s or, whatever, built your house brick or whatever. You don't need to keep it. However, if you feel as though, or you think maybe, or there's something that might suggest that you were wronged by one of the players, having an analysis done might be helpful to you. Any evidence adduced that could possibly help you in your foreclosure matter. Nobody knows. You don't know what happened in your transaction. We don't know what happened in your transaction. There's a lot of government agencies out there that will help you, but if they don't know what happened in your transaction, they can't help you. The courts are there to help you. They can't help you if they don't know what happened in your transaction. So in those instances, having a mortgage transaction analysis that includes the appraisal and all those types of things to see what actually went on in that transaction can be helpful to a homeowner to help them maybe negotiate with the bank or do what needs to be done. Now, to your other question, why don't attorneys that when we do an analysis, why don't they use what we give them? Probably the biggest reason is they'd be admitting to committing malpractice. If a foreclosure, if you look at the idea that a foreclosure is a breach of contract case, what is that attorney supposed to do? If it's a breach of contract case, he's supposed to examine that contract. So if he didn't examine that contract, he committed malpractice. They come into court. Again, all the bank has to do is show that it was breached. And they get to keep the house because you said they could. So if the guy never looked at the contract, and to their defense, they don't know how to analyze a transaction. We had one attorney who's been an attorney for 45 years. I mean, we've had more than one. Almost every attorney we talked to about it said, hey, we don't know how to analyze these transactions. We don't know how our loans are underwritten. We don't know the inner workings of banks. USPAP guidelines, we never even heard the term before we read it in the appraisal section of your analysis. We don't know these things, but we do know that the homeowner breached the contract. So the only thing we know how to do is stall. So they're basically admitting that, we had one client, for an example, a year and a half, this lawyer had her paperwork, same paperwork she sent us. A year and a half, she paid this guy. This guy did nothing in a year and a half, just collect a monthly payment of like $500 every month. So she's in $10,000 in this guy that included his retainer. So that was a problem. And so what happened was when he filed an answer, he didn't use one thing that was in our analysis. And this woman had appraisal fraud, she had broker fraud, she had title company fraud, she had other irregularities within the transaction. There were set-offs, there was recoupment, statutory regulatory problems with it. Guy didn't use one thing. And that's a problem. And they don't do it because they're in essence admitting to committing malpractice.
So how?
And let me say further, too,
okay.
They don't even know how to argue the case. They don't even know how to argue it.
Well, so how are they calling themselves foreclosure defense attorneys when it is about the contract? That's why we're in court. And if they don't understand how to argue the homeowner's defenses of the contract, or in a bigger sense, show that the banks defaulted by their own violations or irregularities, as you called it. Now we're, sadly, right now, there's an overuse of the words quid pro quo, but the quid pro quo is you're saying I defaulted on the contract, but look here, you defaulted on the contract and you did it in the origination or early part of the transaction of this mortgage. So now we have a face-off.
Well, let me answer your first question. How do these guys get away with calling themselves foreclosure defense attorneys? The same way a guy that pumps gasoline at a gas station calls himself a refueling engineer. He's pumping gas in a gas station. He gives himself a glorified term as a refueling engineer. You have some hack that's calling himself a foreclosure defense attorney, but he's putting on no defense. All he's basically doing is if the bank didn't have the note when they submitted the complaint, he's, okay, here's my defense. They don't have standing. Okay, now they do have standing. What's your defense now? They don't have one. I've seen.
So instead of utilizing the real defense, which is, look what you did, bank. You broke this rule, you violated this regulation, you overappraised my house, you did all these things. Instead, they're using arguments that have proven time and time again to fail to win any cases. Now, I'm not talking about dismiss any cases. I'm talking about win cases.
Well, I can tell you this. I've talked to hundreds of so-called foreclosure defense attorneys over the years. Not one of them has ever won a case, ever. Now, they've charged upwards of $40,000 to these homeowners. We see this quite regularly. It's just a scam. They know it's a scam. They become multimillionaires. As a matter of fact, he's probably Neil Garfield. He's a known hack. He's a known nitwit. He doesn't know what he's talking about. Everybody laughs at him. He's never won a case. Nobody that's ever followed him has ever won a case. And what they do is they just come in and they think, well, I'm going to go in and make all these stupid arguments and I'm going to win when the courts have already said they're nonsense. And then what's their fallback position? Their fallback position is, it's not that my argument was bad, is that the judges are in the bank's pocket.
Yeah, the judges are always corrupt.
I mean, you got a guy, Mark Stopa, he got disbarred. He got disbarred he was stealing people's houses. I mean, they have evidence of that. He was ripping off homeowners. Now, to his credit, he told these homeowners that all I do is stall. It was in one of the newspapers in Florida. He said, all I do is stall. But he says, I try to keep them in their house as long as possible. At least he was honest about that. But this guy, they said he made over $5 million. And this guy, Neil Garfield, that I was telling you about, that gave these seminars to attorneys with all these ridiculous arguments, he said, the vast majority of these attorneys that came and took my classes, made about $70,000 a year. They're all now multimillionaires. And
in the meantime, millions of people have lost their homes
Yeah.
Maybe they stalled 4, 5, 3, 9, 8 years, but at the end of the day, they lost. And instead of, let's look at it this way. If all you're doing is stalling, if you do, in fact, have some income coming in and you are able to stall and put that income aside so that you can find yourself another place to live. But what you're doing is you're taking that money and you're paying these attorneys who are stalling, and you still come out the back end with nothing or less than nothing. Less than nothing means you lost the home and you have some whopping deficiency judgment against you, which now is a tax problem. And all the while, if you knew that instead of these false arguments, that there truly were, give me some statistics that that have happened over the last, let's just say, decade, since the financial crisis and everything else. You've discovered that prior to 2007, 8, most mortgages had all these problems you're talking about.
Well,
After that, they fixed a lot of the things because they figured it out that, or they got caught and they got fined and whatever.
well, let me give you an example, prime example. This guy, this fraudster, Neil Garfield, I was telling you about, one of his clients called us. He had paid Garfield $35,000. They went to court, and he told us, he says, we literally got laughed at. He says, the judge basically said, how dare you come in here with these ridiculous arguments? So what did the court do? They sanctioned them, and they made him pay $127,000 in legal fees and sanctions. So this is what happens. There's been dozens of these lawyers that were lawyers that get it on Garfield's group that have been disbarred or sanctioned. One guy up in Minnesota, they hit him with $300,000 in sanctions before they disbarred him. And they just said, hey, look, how many times do we have to tell you these arguments are nonsense and you keep coming in here making the same stupid arguments? So, they just kept sanctioning, and they finally said, look, this guy, they made a referral to the Bar Association of Minnesota. So, look, you got to get rid of this clown. He doesn't know what the hell he's doing, and he's just an embarrassment to the legal, you need to get rid of him. I know Garfield's being investigated as we speak. A lot of these attorneys, they actually belong in jail for ripping these homeowners off. I mean,
well, that's the second problem here. But what's being ignored is the legitimate issues that happen to some of these homeowners that put them in this position in the first place, like predatory lending practices. There's tons of people out there that, excuse me, that should have never been able to get some of the loans that they got. We know that there was a mad rush to create mortgages. The old joke about if you could fog a mirror, you could get a mortgage back in the early mid 2000s. And so, but at the same time, they were processing a massive amount of mortgages, and that's the same era that a lot of these breach of contract on the part of the bank has happened.
Well, the bank can be negligent, but the bank can't commit fraud per se, because they gave you what you asked for. You went in and said, look, I want $300,000. They gave you what you asked for. Now, a lot of the fraud came from brokers. What these brokers would do, we find, and I should probably explain how the things that we find. The Federal Deposit Insurance Corporation, they sent their bank examiners out, and they found that 83% of the mortgages had problems and 76% of the appraisals were bad. Now, we've done 10 times what the FDIC did. Our stats are a little bit higher. 90% of the mortgages are bad and 80% of the appraisals are bad. But if you just use the stats of the FDIC, 73% of the mortgages, 83% of the mortgages and 76% of the appraisals are bad, what's the chances are there's something wrong with your transaction? Now, we find, as I said, appraisal fraud about 80% of the time. We find broker fraud about 65% of the time. And that was what these brokers were doing. They would take what you told them over the phone or in person, and then what you made, what your assets, what your liabilities were, that type of stuff. And then they would shop it to a couple of the lenders that were on their lists. Those lenders would come back and say, look, we can't do the deal because your guy doesn't make enough money. Well, what do you mean? Well, you told us he made $5,000 a month. He would have had to have made $7,000 a month for us to do this loan. Well, these brokers couldn't go back to those two lenders, so they go to two other lenders. They now say the guy's making $7,000 a month. And based on that, they fund the loan. That's broker fraud. And then they go to closing. They sneak the 1003, the loan app in there with a bunch of other paperwork, little stickies at the side, sign here. Then they'd sign it unbeknownst. It said 7,000 instead of what they told. So we find broker fraud, as I said, about 65% of the time. Then you have other problems. You have title company fraud. You have bad legal descriptions. You have statutory regulatory mandates that weren't followed. You have a lot of problems with this. But basically on the bank's part, not following statutory regulatory mandates and negligence on their part, because as you said, tens of millions, hundreds of millions of loans were coming in because they changed all the laws to allow this stuff to happen. And these people, they were just getting them out the door as quick as they could. They weren't keeping them. They were selling them off to Fannie Mae, Freddie Mac. 98% of all non-jumbo loans in the United States are owned by them. So you had that. You had investors in China, Dubai, places like that buying up these loans. And so basically that's what happened. But the statistics show that, and I tell people, look, don't listen to me, that we found 90% and 80%. Look at the FDIC. They said 83% and 76%. Use their stats. And
okay.
This is
So
problems with your transaction.
Okay, so now, for example, we have foreclosure defense attorneys using bogus arguments that have proven time and time again not to win any cases, not to win any foreclosure cases, because they're arguing outside the breach of contract case. They're arguing stuff that is irrelevant, okay? And then you have homeowners who have legitimate found transaction issues, problems, regulatory, broker, appraiser, but nobody's using them because they don't know about it. Okay.
Well, they don't know about it because we're the only firm in the country that does what we do. And that's the problem.
Well, because the lawyers are not accountants, forensic, looking at thousands of pieces of paper.
Has nothing to do with forensic. It has nothing to do with that at all. The question is, it's like the commercial on TV. What's in your wallet? Well, in this, what's in your transaction? And unless you have professionals that know how to analyze a mortgage transaction, and again, that includes the appraisal and everything else that dealt with it, unless you have somebody that knows how to do that, you don't know what evidence you have that you can use. And again, government agencies and the courts will help you, but they can't help you if they don't know what happened in your transaction. Now, again, because we do our litigation support in criminal cases and other civil cases, we have another company that we analyze just notes for these pension funds and hedge funds that buy them from the government. Last year, Fannie Mae, Freddie Mac sold $18 billion with a B in non-performing notes. They've already sold billions this year in non-performing notes. So we analyze the notes for them. We're now beginning to analyze student loans because they have the same problems as well. But the key issue is at the end of the day, what happened in your transaction? And if you don't know, you can't speak of it. So it's just basically just a waste of time and energy, because all you're doing is you're paying money in most instances when a lawyer is hired in a non-judicial state. you're hiring somebody that is incompetent when it comes to analyzing a transaction. In states like non-judicial states, all they have to do is run an ad in the newspaper for 4 consecutive weeks and your house is gone. And that's the majority of states. The reason why the majority of states are non-judicial states, the legislatures looked at it and said, look, we don't need to get a court involved. This is a confessed judgment. The homeowner told the trustee, sell the house if I don't make the payments. So again, if you finance a car and don't make timely payments, what happens? They come by with a tow truck, they tow your car away. Why? Because you told them to. That's all they're doing. They're doing what you told them to. Unless there's a problem with that transaction, they are going to take your house, guaranteed. Especially if they refuse to give you a loan mod or something like that. But even then, when it comes to a loan mod, you're better off having your transaction analyzed because you have more to negotiate with. So, we have client after client after client that comes to us that's been ripped off by some forensic loan auditor, securitization auditor, some stalled attorney, or some other nitwit that's fed them with a bunch of nonsense. And as I tell everyone when I give seminars, we have our nationally syndicated radio show, Fraudsters Radio. So when I speak there, I speak in front of homeowners and lawyers and so forth. First thing I do when I come out is I said, look, you're going to get a cranial enema for free because I got to get all the crap out of your head before you're going to understand what actually happened. I think you're beginning to realize now in talking to people that, that's the case. They've already been scammed. They've already spent a bunch of money, wasted time, wasted money for nothing.
Well, it's not just wasted time and money with attorneys. There's also the wonderful world of the internet with all of the mythology and fake news and irrational arguments that charlatans and scammers have been putting out there that people want to believe. Sounds good. Money's not real. Sounds good. Okay, go try to buy some bread without it. The securitization arguments, it didn't make it into the trust in time. All of these things, people read them from people who sound like they know what they're talking about. They sound like they make sense, especially if it's some, attorney like Garfield or Stopa or any of these guys who have blogs, on the internet. And so that's all of the silver bullet stuff they've been hearing. And they can't understand why it doesn't work. So it must be the courts and it must be the judges and it must be, the unfairness of the system. But then when you explain to them, rationally, why these things you've been reading and hearing for years now, a decade, don't work and not only don't work, but aren't true. It doesn't take very long before you can roll somebody back away from all of that disinfo and explain why you want to go with all this convoluted argument stuff when you may very well have been harmed by the contents of the transaction. The documents speak for themselves. Why wouldn't you want to use something real?
Well, the problem, Lori, is this, and you're a prime example of it. I tell people all the time, you don't know what you don't know. And you went through it for 9 years because you didn't know we existed.
Right.
So what you did is you followed one scam after the other. It led you down this rabbit hole and that rabbit hole and another rabbit hole, spent a bunch of money. None of it worked. They're coming to take your house. And then finally, you spoke with us and the light bulb went off. You went, oh my God, yes, this makes perfect sense. And
especially if I knew that, from my own intelligence and my own recollection, I knew there were things that were done improperly. but I don't have the 99% of homeowners out there don't have the expertise to look at something.
You didn't know, you assumed something was wrong, and that's a lot of it. It's assumptions and presumptions. What we provide is the evidence.
Right. Here's the document. Here's what the regulation was they broke. This is simple stuff.
Well, you said it. The documents speak for themselves. The evidence speaks for themselves. I have clients tell me all the time, they say, well, the bank committed fraud. I said, well, how do you know that? Oh, well, they added up this wrong. I said, maybe they're just bad at math. I said, fraud has to be played with specificity. Who, what, when, where, how? What was the fraud? Well, you assume this happened. You assume that happened. But what we do is we say, look, here's your document. Here's your document here. And your document proves the fraud. Here it is. Here's how they overappraised your property. We've had several clients overappraised by $100,000, $150,000. Well, what you did is when you borrow money, you in essence are buying money. Give me this $400,000 and I'm going to pay you back at this interest rate over this period of time. So you're basically buying money. You wouldn't buy $400,000 on a piece of property that's worth $250,000. But you didn't know that because you don't get your appraisal at closing. So you didn't know what it says. The bank took the appraisal. That's why that's one of the laws that they changed after 2010. You could no longer have people on an approved appraiser list. These brokers would go to Joe on their approved appraiser list. Hey, Joe, I need for you to come back with $400,000 on this property so I can get this loan done. Joe, the appraiser, would come back and say, look, it's not worth $400,000, it's only worth $250,000. Hey, Joe, need I remind you that you won't be on our approved appraiser list any longer unless you give me the $400,000? Well, Joe, the appraiser would say, nobody's ever going to find this out. I'm going to say it's worth $400,000. Well, you just bought a piece of property that's worth $250,000 and you took out $400,000 to buy it. That was the biggest problem. That's what caused the market to tank. The real estate market tanked, and that's what tanked the economy.
Okay, so right there, automatically what I see is that process was done backwards. In other words, a homeowner, a seller is selling their house for $400,000 because that's what they want and that's what they think it's worth. And if somebody wants to come along and pay that for it, good deal. Okay. The appraisal should be done before you ever even put a bid on the property and write a contract. Otherwise, how do you know that you're not overbidding and you're doing it because, oh, I really need this house. Oh, I really love this house. This is the house I want, no matter if it's a little overpriced or not. Okay. So you don't know that the appraisal could possibly come back less until after you've already put a contract on the house to get all this stuff, the ducks start to line up. And so the bank is going to want to loan you what you want to borrow as long as you show the ability to repay the loan. And they got their little formulas. As long as you make X, our formula says you're going to need to spend this much on other costs. You only should be able to afford what is it? 45% of your monthly income for mortgage taxes and insurance costs. If you don't make that, you're not going to qualify. So all of these shenanigans are going on to get these two people lined up, the bank and the buyer and the seller, three people, to make everybody happy. And in many cases, all these things aren't really going to line up so good.
Well, the reason why they didn't line up is because nobody gets paid unless there's a loan.
Right.
And when you have money involved, people will basically fudge things in order to get paid. Okay, the seller doesn't sell his house. Okay, the mortgage broker doesn't make a commission. The real estate agent doesn't make a commission. So none of these people get paid unless there's a loan. So they would all collude with one another to get the loan through. I mean, we see it all the time. And this is part of the fraud that you can show because, again, the documents and evidence speaks for itself. So, you know, we have a case we just did here not too long ago where the guy washed dishes and he had something like, he called himself, or at least the broker called him, you know, like the gas station attendant calling himself a refueling engineer. He had some other term for what he did, and they put down this guy was making $75,000 a year. The guy was making $14 an hour in reality. But they changed his 1003 to reflect that he made this guy. Never got the loan in the first place. Then, worse, he goes into a closing. The guy speaks no English whatsoever. He goes in, no interpreter, no nothing. They just hand him a stack of papers, little stickies outside, sign here, he signs here, off he goes. That's part of the problem. All these different groups, because they want to get paid. Again, you got the title company in there. They don't get paid. They don't sell title insurance. You know, you got
appraiser doesn't get paid. Surveyor doesn't get paid. The home inspection guy doesn't get paid.
Exactly. So people will fudge things to get loans done. We've never done an analysis ever that we didn't find something in that transaction that was bad, ever.
Okay, now, having said that, there are most of the mortgages are years old, like a decade old, or maybe 7 or 8 years old. The newer mortgages, have they cleaned up all their act, or, you know, are there as many problems as there were with the 2001 to 2010 loans?
Anything prior to 2010, if somebody comes to us with a loan prior to 2010, I can almost with 100% assurance tell you there's a problem in there without looking at it, because I know what was going on back then. After that, they cleaned up a lot of things. They don't have approved appraiser lists any longer. They don't have a lot of the TILA guidelines, HOPA guidelines, RESPA guidelines changed. A lot of that stuff. Now, there still can be problems because, again, you're dealing with a contract. People can fudge things in contracts. People can be, you know, they can say, okay, well, the loan is 5.65%, when it actually should have been 5.25%. You have that. You still have people committing appraisal fraud. You still have people doing things. So you don't know. But in that period of time, prior to 2010, almost 100% chance there's something wrong with that transaction.
Okay, so
now the question I think you were going to get to is the statute of limitations.
Okay.
I get asked that lots of times. They'll say, well, Storm, you know, I got my loan in 2005. Here it is 2019. It's 14 years later. You know, what if I got this stuff? My lawyer told me that the statute of limitations is wrong. Well, they talked to an incompetent lawyer because there's what's known as set-offs and recoupment. Now, these statutory regulatory mandates, it's written into the statute that there's recoupment. What that means is if you're within the statute of limitations, you can file a complaint yourself as a plaintiff and ask for damages based on any wrongdoing you find if you're within the statute of limitations. Like the Truth in Lending Act, they have a statute. One part of the Truth in Lending Act has a 1-year statute of limitations on damages. Another one for rescission has a 3-year statute of limitations. So if you're within the statute of limitations, you can file this plaintiff lawsuit. If you're outside of the statute of limitations, you can't. However, if they try to take your house and there was statutory regulatory violations, or there's breaches of contract, or there was other problems, you get what's called recoupment or set-off. And how the court looks at it is they say, well, wait a minute, or the law looks at it, I should say, is wait a minute, they did rip off Lori. Now, we see that. I mean, here's the evidence that she brought in here that they did rip her off. Now, statute of limitations is run, so she can't sue as a party plaintiff. But we're going to give her what she could have gotten if she sued as a plaintiff. It's called recoupment and set off. And most attorneys don't know this. I mean, this other attorney has been an attorney for 40 some years. He told me, he said, we did an analysis for him, and he came back and he said, Storm, he says, he says, I see all these problems here, but he says, the statute of limitations is run. We just can't use this. And I said, well, you can't use it, but I could. And he goes, Storm, I know you. What do you got up your sleeve? I said, it's nothing up my sleeve. It's the law. So he says, can you send me the law on this? And I said, sure. I sent him the law. He called me back about an hour and a half later, says, Storm, I'm ashamed to have told you I've been an attorney for 40 some odd years. I didn't know any of this. And most attorneys don't know this.
Well, I mean, I can totally understand that if you're hyper-focused in a specific area of law and don't have any cases and don't have any reason to go digging around over here looking for other statute violations, law terms, blah, blah, then you just never went and looked in that closet. You could live in a house for 10 years. It just never went in that room. And
well, the problem that you have, Lori, is it's like the medical field. And this is my analogy. You have a guy he's an attorney. Okay. He's a member of the bar in your state. He's an attorney, but he was doing all these other things prior to being a quote foreclosure defense attorney. He doesn't know the law. He's like, you have a doctor, he's a proctologist, but you go have an MRI done and they said that you've got a brain tumor. You're not going to go to your proctologist to operate on your brain. You're going to find someone who's expert at that. Well, these people go in, here's this attorney, he's been doing wills for 25 years, and now he's, quote, a foreclosure defense attorney. He doesn't know the law. So you're going to someone who is not competent in that field, which makes that another problem. It's an ethics violation for an attorney to take on some sort of a case that he has no knowledge about.
Right. Well, right there screams scam. You're happy to take their $1,500 retainer, an initial retainer, and give him the 30-minute free consultation and sign him up for $500 a month, to fight the case. And at the same time, you don't ask them about their contract. You don't understand, you obviously don't understand what you're fighting here, because if you did, why are you using bullshit arguments that have already been ruled against, and so on? And this is the part, it's like, I'm one of those Joan of Arc people. I just can't help myself. I want to go and grab attorneys that's doing this stuff by the two ears and shake them and say, stop it. You're hurting people. I don't care if you're doing it just to make money. And I don't even care if you don't know any better, because how you'd have to be living in a closet not to know any better, because cases have been lost time and time again, on and on. It's infuriating to me. It's these other scammers that are coming up with these, securitization and all the other disinfo arguments that you read all over the web. But attorneys have a responsibility to their client. It's kind of almost, Hippocratic, first do no harm, and they're harming people.
Well, the problem, Lori, is that, when someone goes to Joe the attorney, they don't know what he's holding himself out as a foreclosure defense attorney.
Sure.
They don't know that all he's been doing is wills for the last 25 years. Or the guy's been doing family law, divorces, or the guy's been doing something. They don't know that. They just know, I'm a foreclosure defense attorney. I can help you with your case. That's part of the problem. Now, the question is, how come, which leads to the end result, is how come the bar associations haven't gone after these guys?
Yeah.
And the reason why they haven't, bar associations aren't going against somebody unless a complaint's been filed. Well, these homeowners aren't filing complaints. Why aren't they filing complaints? Well, the lawyer tells them, hey, look, I kept you in your house for the last 4 years. Why are you complaining? Without me, you wouldn't be in your house for the last 4 years. Well, that's a lie, because in judicial states, it takes a minimum of 3 years to wind its way through the court system. Anyway, if you do nothing, so you spend all of this money. I'll give you a case in point. A very well-known, quote, foreclosure defense attorney in Florida. He, when I gave a talk down there, he came up. There's a group of us. He said, "Look, I got 200 clients." He says, "I'm not taking another foreclosure case unless they come through your firm to get it analyzed." And so anyway, he goes away, and they're saying, "Oh, damn, Storm, he's going to send you all 200 of his clients, and nobody else. He's never going to take another case till it goes through your firm." And I said, "He'll never send us a case." "Well, Storm, he just said he would." I said, "Trust me, he'll never send us a case." "Well, why do you say that?" I said, "Because he's making too much damn money doing nothing." What he does is, Harry homeowner comes in, he immediately relieved him of $3,500, and then to start paying $1,000 a month after that. Sends him on his way, calls Susie's secretary and says, "Hey, Susie, you know that last answer in grounds of defense we did? Take that guy's name off, put Harry homeowner's name on here, bring it in here, I'll sign it, take it down and file it." They wait for months, nothing happens, finally winds his way through the court system. He's paid this guy 40 grand. Now, if they had the note when they filed it, they take his house. If he didn't have the note when he filed it, it gets kicked, and then they go right down, they refile it, and the guy comes back. I asked the guy, I said, "Look, let me ask you a question." I said, "After your, quote, so-called win, and they come back and reforeclose, you charge that guy another $3,500 and $1,000? "Oh, yeah, I won the case."
It's a new case.
Yeah, I said, "You didn't win. That was a stall." So that's the problem that you have. And then you have these homeowners, and then if that, and also, by the way, the courts are corrupt and everything else. Like I told you, this guy Mark Stoker that got disbarred, he's writing a book now saying that all the judges in Florida are corrupt. I mean, it's total nitwittery, and people, and these other attorneys that are scamming people. I got in an argument with this attorney the other day, tried to say, "Oh, Stoker was great." Excuse me. The guy had 8,000 clients and everyone got foreclosed on. And the guy made millions ripping off homeowners. And he goes, "Oh, well, he was really good. He won all these." I said, "He didn't win cases. He stalled cases." "Well, that's a win." I said, "No, it's not a win. It's a win for you because it's money in your pocket. It's not a win for the homeowner that got ripped off and loses their home."
I mean, how many times have I've been investigating and learning and personally involved in the whole foreclosure arena for 10 years. And people say, a dismissal is as good as a win. And no, it's not, because you already paid your attorney. They're already finished. They're not. I had one who wouldn't take my case again after he won the first dismissal. 6 months later, a new bank was back. They're going to keep coming until they finalize it. They can't not do that. They can't walk away. Something else legally would have to happen if they decided to walk away. Whether it's
the $400,000 you borrowed,
well,
they can't walk away.
I didn't borrow that much, but I'm glad I didn't. Thank God. But the fact of the matter is PETE status, PETE. All they have to do is have the note, and it doesn't matter whether it's the original bank that you borrowed the money from, or some bank that bought it from Fannie Mae, or how many times it was transferred. They just have to have the note. Person entitled to enforce. Learned that from you. And so when somebody is going to make it worthwhile to take that piece of property, because what most people don't really grasp is the servicer is paying the monthly payment to the trust, regardless of whether you're paying it or not. Am I correct in saying that?
Right.
Okay. Now,
came from the TARP money was not because these banks were insolvent. The TARP money was an operating fund, because what they were doing is they're paying all these billions of dollars to these people that own these notes in Dubai, in China, and all these other places. They're spending billions of dollars. So what this was an operating fund for them to stay in business while they're paying out this money until they could foreclose. Because when they foreclose, they get all the money, they get all that money back that they had paid out, plus foreclosure fees and everything else. That's why they were doing what they were doing. So, again, there's no free lunch, and you're not going to, nobody's walking away from this $400,000 debt that you have. You're going to pay it unless there's a problem with that transaction. If there's a problem with that transaction, you're either going to negotiate something that's better than what you have, or you're going to get free title, or you're going to get tons of money. As we said earlier, all of those arguments I said that are nonsense, nobody's ever won, ever. Now, conversely, people that have attacked the contract, there's been dozens of multi-million-dollar awards, dozens and dozens of free title to property, and every conceivable settlement offer you can think of, well over 90% of the time, because as the FDIC found out, 83% of the mortgages are bad and 76% of the appraisals are bad. This isn't high math. This is really easy stuff. But when you have scammers and stall attorneys that are muddying the waters, therein lies the problem.
Okay, so why doesn't the American public know about these people who have settled and made millions of dollars, or got free title to their house, or maybe even as minor as worked out a settlement that modified their loan better than what they were stuck with before? Why doesn't the American population know about this? And it's a simple answer.
You'll see it periodically in the paper. You'll see it periodically on the internet, but it's not big news. And let me give you an example. How this all got started with people making these arguments was back in Ohio in 2000, I think it was 2006, 2007. Deutsche Bank came in to foreclose on 14 homes. And what happened prior to that, people inherently knew that they had breached the contract. So what they would do is they call the bank, they'd see if the bank would work some kind of a deal with them. And at the time, the banks would say, hey, sorry, you breached the contract, we just could take your house. So the homeowner would say, well, look, do you want me to leave the keys in the mailbox or bring them to the bank, or what do you want me to do? And that was that. So in a judicial state, when they went to court, they didn't even bring any paperwork in. They would just come in and they'd say Deutsche Bank versus Smith. Mr. Smith, you in the courtroom? No answer. Judgment on the affidavit. Deutsche Bank versus Jones. Ms. Jones? No answer. Judgment on the affidavit, and so forth and so on. Well, one day, Deutsche Bank comes in, foreclose on these 14 homes, same routine. And they come in, and a lawyer for one of the people of the 14 said, well, Your Honor, I was researching the law here, and they didn't follow some of the law that we have here in Ohio to foreclose. So the judge said, can you show me that? And he looked at it, he says, you're right. And so they didn't have standing at the time because they didn't have the note. It was one of the problems. So Judge Boyko said, look, I'm not only going to dismiss yours, Deutsche Bank, do you have any paperwork for these other ones? No, we don't have it. I'm going to dismiss all 14 of them. Well, it was the front page of every newspaper in the country. Okay?
Standing.
No, not standing so much, but, Deutsche Bank, thrown out of court.
Big loser. Okay.
Yeah, we dismissed the case. Well, as Paul Harvey used to say, I'll give you the rest of the story. About 10 days later, Deutsche Bank came back and foreclosed on all 14 of them. And I even talked to the Deutsche Bank lawyers about it. They called the person who ran the story originally and said, why don't you print this? And they didn't print it because it wasn't sensational.
Right.
That was the rest of the story. And that's the rest of the story, what happens to these other homeowners that go in and they argue assignment or standing or something like that. But as I tell people, my mother said all men are liars. Don't believe them. Well, I got 5 kids. Last time I checked, I'm a man. So I tell people, don't listen to me. Listen to what my mother said. Take it for checking. And you can go to our website, www.mortgagefraudexaminers.com. We have a library. I haven't even updated the library, which I've got to talk to Jim about updating the library. We got a couple hundred cases there showing all these arguments are nonsense. Look at the cases, read them for yourself. And if you think you're going to go into court and every court in the country said this argument is nonsense and you're going to win, you're a bigger fool than I thought you were. And I tell this to everybody. I try to treat everybody like a family member. I'm not going to, sugarcoat it for you. I'm not going to tell you what you want to hear. I'm going to tell you what you need to hear. If you don't want to hear it, go someplace else.
Right. Well, that's how the truth works. The truth works that way. You may not like the truth, but that doesn't make it not the truth. And so, the difference of doing it the right way and doing it however you can manage. The right way will get you the results that you need. Doing it the wrong way will, you talk about your mother's sayings. My grandfather's saying was, if you don't have time to do it right, you don't have time to do it over. So do it right and you get results. Do it wrong with the stall stuff and all these other arguments. You're going to have to do it over and over and over again. And they will win eventually because the law is very specific about the contract that you signed with them. It's all in the contract.
And the courts have said that it's a contract. They've all said we have to follow the four corners of the contract. If you read the cases, they'll tell you it's a contract dispute. But nobody.
So what does the contract have to do with securitization? What does the contract have to do with, min numbers and MERS and whatever else happened to it after the fact? There's enough there in most of the cases. I mean, I'm now the one talking to people on the phone when they call, allowing you more time to actually work. And I'm learning in the Rapid Ready program that everybody has a story. No two stories are the same, but they all suspect something went wrong. Now most of every one of them admits they either got behind in a payment or stopped making payments or something happened that they defaulted, whether it was a medical issue, my dog died, I lost my homework, whatever it was. But at the end of the day, they all feel like this isn't my grandparents' mortgage situation. It's not the same as it used to be. And it really is, because you have two people, the lender and the borrower, signing a contract that you both were supposed to have read. And obviously there's another argument in there that I'll bring up, is the bank didn't sign the contract. And so at the end of the day, that's what this is about. It's about the contract. And if you're willing,
if you have to sign the contract.
I'm sorry, say again.
The bank doesn't have to sign the contract. Only the party to be charged has to sign the contract, and that's the borrower. That's law.
And that's law.
50 years. That's it.
Okay. Because it's obvious it's not your contract that the bank is signing. It's the bank's contract that you are signing, correct? Correct. I mean, I have loaned people money before, and they say, oh, please, let me give you a promissory note or an IOU or whatever. Okay, fine. If you want that, I mean, I don't need that, because I'll just come and break your knuckles if you don't give me my money back someday. Just kidding. But if you want to make a promissory note or an IOU, go ahead. And
that's what a promissory note is.
And sign it. I don't have to sign it. I just have to have it.
Yeah, right? You just need it.
It's the same thing. Yeah. If I give the promissory note to you because I owed you some money and I don't have it, but this person owes me some money, so now I'm giving it to you, all you have to do is present the promissory note to the person who signed it, and they owe you, right?
Well, the ridiculous thing of it is you're borrowing things all the time. just think logically for a second. There have been hundreds of millions of mortgage contracts. There's been hundreds of millions of car contracts or any other type of contract. Just think if all of a sudden everybody said, well, wait a minute, the bank never signed the contract. I'm out of it. I don't owe anybody any money. It's ridiculous. Anybody that even thinks in those terms shouldn't be able to get a loan because you're not smart enough if you believe nonsense like that.
Well, credit card. They send you a credit card in the mail. You made an application for a credit card. They send you a credit card. Is their signature on the credit card, or who signs on the dotted line or puts the PIN number in every time they use the card?
That's
the
right.
Borrower.
Exactly.
You don't go to Walmart and buy bags full of groceries and hand them your credit card and they say, oh, wait, we have to get the bank to sign too.
That's it. Well, that's a good analogy because now's the time of year. A lot of people go to Walmart and there's a layaway plan. Right. Where you pay a little bit and keep paying until, you pay it off. Walmart doesn't sign anything. And
they don't give you the merchandise until you pay off the layaway. It's not credit, it's layaway.
Exactly.
So here we have all these different kinds of transactions, but at the end of the day, if you have buyer's remorse because you bought too expensive of a house that you couldn't afford or couldn't afford 5 years later because the dynamics of the world changed, okay, and it did for a whole bunch of other people, not just you. Buyer's remorse is one thing. Before you default on the contract, sell the house, get out from under it. Okay, well, I was going to do that, but the whole, country's home values went upside down in 2008 or 9 or whatever, and I couldn't sell my house for enough to get out from under the debt. Shit happens. It happened to a lot of people.
Exactly.
That's part of why they came up with the modification issue. And a lot of people didn't understand that. They didn't understand that you weren't just modifying the interest rate to get a better interest rate. Maybe you were getting a principal reduction. Maybe whatever you were asking for, there were lots of levels of modifications back then. Okay?
Well, think of that for a second. Look at all the people that lost everything in the stock market at the same time. I mean, people get into deals all the time that don't work out. Yeah. I mean, people borrow money to open a restaurant and their food stinks and they get shut down, or they're dirty and the health department shuts them down, whatever the case may be. Well, it's absurd for you to think that you don't have to pay the money back.
Well, I mean, it's just like anything. It's like buying, someone calls you up and says, oh, go buy Facebook stock because it's about to go up, or go short Facebook stock because it's about to go down. That's a tip. How valuable is the tip? How reliable is the tip? I'm going to go make the bet because that's what stock is. It's a bet. All right. It's gambling.
Well, Lori, let's do this. I think we've gotten the point across of what works and doesn't work, and they can call us, at our number,
844-972-7200.
Yeah, give you a call. You'll answer the phone. You were a victim of all the nonsense. You got an analysis done. They can talk to you. You're knowledgeable in how things work. You know what you did. You've talked to other people that we've done an analysis for, and they if they went to some attorney that doesn't know what the hell they're doing, they better get rid of him and get another attorney and somebody that can do it right for them, because they'll be successful. We've given them the evidence that they need, and that's the one thing I tell people. Once that analysis is out of our hands, you hired us to analyze your transaction. it's going to come back warts and all. If you committed bank fraud, we're going to tell you committed bank fraud. If there were problems in that transaction that are helpful to you, great. What you decide to do with that evidence is up to you. We do not guarantee results. We don't guarantee anything. We just guarantee you that if you do nothing, they're going to take your house. But if you do something and evidence is adduced that will help you, that's something that you could use to help yourself. But again, we're not a mortgage relief company or
there you go.
Company. We're just analyzing transactions for you, and you do with what you wish with that evidence that we provide.
Okay. Thank you for your time, Storm. And we'll be doing this periodically to sort of update people on what's going on with, I guess the industry or whatever. We do have a YouTube channel, Facebook group, Instagram, Twitter. We're everywhere. But the main thing is call and talk and brief me on your story, and I'll see if we can help you. And
we don't charge for education.
No,
we educate the public for free. We'll tell you all day long. We'll show you the law. We'll show you everything else. You read it on your own. Don't listen to us. Just look at the law. But if you so decide that you want to have an analysis done, and we have some spots available, because as you know, we only take on so many new clients a month. If we got a spot available for you, hopefully we can do an analysis. If not, at least we'll give you the education that you need, and you won't get scammed by some stall attorney or one of these securitization or forensic loan owners or
right.
One of these wits that run around.
Well, that was the purpose of this broadcast, was just to talk about all the things not to do and all the scammers out there, and to beware and be wary of people telling you silver bullet stories and not investigating it for yourself. So
and that your background, I think I'm going to go out and get some sushi, that Japanese art that you have behind
me.
Oh,
the screen, shoji screen. Yeah, it's my grandmother's brought back from Japan post-war. Yeah, a long time ago. And so thanks. We'll be back again within a few weeks, probably, to do some more updates. But this is the heart of the matter. And thanks, Storm.
I know we're going to speak, but I want to wish you a happy Thanksgiving, and a happy Thanksgiving and holidays to all the people that might, take a look at our video.
Okay.
Okay. Adios.
I agree. Bye-bye.
Bye.